Hello, everyone. My name is Gordon Sprunk, and welcome to the March 2024 Hog and Pig webinar hosted by the National Pork Board. I'm a producer from Minnesota. I also serve as a board member on the National Pork Board. As many of you are aware or are not aware, that National Pork Board is a producer-led organization that seeks collaboration with industry experts. We have two great experts today that I'll introduce shortly in order to provide awareness and distribute information to help all farmers with a wide array of business objectives to foster success on their swine farms. Producers on this webinar are also aware of the economic conditions and headwinds and challenges that we have faced in the last 12 to 18 months. And as a producer, I'm fully aware and can provide testimony to those headwinds also. So we'll talk a little bit about that today with our guests. Production costs certainly have hit, if not historic levels, certainly approaching historic levels in the last 12 months. And I can tell you as recently as today on our National Pork Board of Directors call, those issues are discussed, and we seek to provide information and seek information on how we can provide success for all our producers and the entire U.S. Industry. Today, we're joined, as on the slide here shows, by Dr. Steve Meyer. He's a senior economist at Ever.Ag, and Brett Stuart, president of Global AgriTrends. They'll give their review, expert review of the Hog and Pig report that was released as recently as in the last couple of hours. And Brett will talk a little bit about the global industry and as the U.S. fits into that. As a reminder, this webinar is being recorded and will be distributed post-event. So wish to thank everyone for joining us today. Before we begin, as is custom for National Pork Board activities, all the work that the National Pork Board does complies with the Sherman Act, which is shown here, the 5 points. The best rule of thumb is if you have any questions where you have a concern about application of this antitrust statement, before you do ask the question or be it discussed, please clear it with an attorney. I'll just pause here just a little bit to allow those of you that may not be familiar with the Sherman Act just to give a little bit of a review. But in addition, for your awareness, there's a National Pork Board disclaimer that this webinar is being presented using funds from the Pork Checkoff, and the purpose of the webinar is to facilitate better understanding for everyone in our entire industry of any information that is publicly available. We believe strongly, and I'm sure hopefully you agree with that the pork industry and ultimately our consumers all benefit from a better understanding of the economic conditions that face our industry. Okay, at this time, I'll hand it over to our first expert, Dr. Steve Meyer. Welcome, Steve, and the screen is yours.
All right, thank you. And good afternoon, everyone. It's good to be with you. Let's go to that first one. We have a disclaimer. We got all kinds of disclaimers here, but the first one is one regarding the trading of futures and options. We are an introducing broker. Ever.Ag is. We are an introducing broker. We do advise trading in futures and options. They are risky ventures, so you should be careful about them. My boss, Joe Kearns, says that this thing says that if you trade any day, anything that I say here today and lose money, it's your fault, not mine. The second one is kind of a reiteration of Gordon's antitrust issues. If we change the slide, please. And that is nothing in this presentation is intended to suggest output or pricing action by producers or packers or anybody else, by me personally, by Ever.Ag, or by the Pork Board or NPPC, two organizations for which I serve as their consulting economist. My comments are strictly based on my opinion of what market forces will cause to happen, and all producers and packers should do individually what is in their best interest. So we don't mean this as any kind of a coordination issue. Go to the next one, please. The next slide shows, and we're gonna talk about two topics before we get to the Hogs and Pigs report. Obviously, supply is a really important thing, but actually supply is taking a back seat last year and so far this year to what's going on with cost and demand. And so I'm going to talk about domestic demand. Brett's going to talk a lot about export international demand. We're going to talk about cost of production, and then we'll get to the Hogs and Pigs report. which was pretty much as expected. There are some implications to it that we have to be careful about, though. Okay, first, demand. This is real per capita expenditures for beef, pork, and chicken. Historically, and you can see that we've had 2 or 3 really good years in recent years. 21 was record high, 22 was another record high, 23 was a bit of a struggle, and especially from the fourth quarter of 22 into the first half of 23, you can see that real per capita expenditures for these 3 species dropped significantly from over $69, right at $69 those are in 2019 to $21 per month, down to just over 60. Now, the good thing is they've had a big rebound since then. And in fact, the January observation for this was the 4th highest ever, and a terrific run up in consumer level demand for beef, pork, and chicken. Now, I don't have turkey in here because I don't have a good retail price from USDA on turkey, but I can assure you that turkey wouldn't make a lot of difference in this conclusion. Okay, we go to the next one. We can see the same calculation just for pork. And that one looks, we had record 2021 and 22 demand. We had a really tough first half of 23. And I don't know exactly why that happened, but it certainly was. That observation there in July of last summer was the lowest in 10 years for a monthly real per capita expenditures number. And yet the observation in October was the 10th highest ever. So we've had a pretty good rebound here, and I think we're in pretty good shape going into 2024. You look at the next one, shows the 3 species separately, and month over month change for January. The February observation for pork real per capita expenditures is an estimate based on my estimate of February exports and imports, and it would put us right at where we were a year ago. We were down about 3.8% in January, but still above the 5-year average. And so, I look at this really normally in a more long-term context. And so you can see beef had a terrific January, up 9% from a year ago, and that's kind of leading the way at the moment. Chicken was basically unchanged. So the consumer level demand situation in the United States has improved dramatically from last summer. And, it's kind of approaching where we were in 2021 and 22. Now, the next one shows U.S. pork per capita availability. This number for 24 has just bounced around 50. It was below 50 after the December report. This one pushed it back up above 50 at 50.4 pounds per person. If we go back to 1980, most of the observations are between 50 and 52. Now, do not confuse per capita consumption as a demand variable. It is the quantity variable part of demand, but that would exclude prices, which are part of demand as well. So I look at this as a supply variable and call it per capita availability, and then we'll see what kind of price that brings in the marketplace. If we look at the next one, this is another way to look at demand, and it's a scatter diagram, and you can see 2021 and 22, and this is retail pork price deflated versus per capita availability in the United States. And of course, 21, 22 are off the charts. You can see that 23 was back down in the 2018, 19, 20 family. Right now, if we had to call it a year right now, we would say 50.4 pounds of pork per person. And so far, the real price has been about $4.14 or so, where the black X is. So we're kind of back in that at the consumer level in the United States. Now, that's the bad news. The good news is we go to the next one. This is what we would take the same kind of view for the wholesale level. So this would include exports and domestic business. And Brett's going to tell you more details about exports, but this is just a gross view of how much pork is available and what's the cutout value. Exporters compete in our wholesale market to buy their product. And so that's the reason we look at it. And you can see as of June of last summer, 2023 was decidedly bad relative to the prior 2 years. We'd had 2 great years, and then it had backed off back into that same kind of family of 2018, 19, and 20. But if we take the next one, this is where we are today. And you can see this one would be the week of March 22nd. 2023 ended up between the pre-2021 level and the 21 and 22 outliers at about $90 per hundredweight on the average cutout value. and 28 billion and change for a total pork available. 2024 right now, based on the first 2 months of actual data and what my forecasts are for the rest of the year, would put us right back in the 21-22 realm of where we are on wholesale demand. And you say, well, wait a minute, you just told me that consumer level demand was back in that pre-2021 level. How is 24 demand this good? Well, there's two factors. One of them is exports, and Brett's going to talk to you about that in a minute, and it is a decidedly good story. The second one is that we've squeezed the wholesale retail spread. There's a spread between obviously wholesale prices and retail prices, and that got really wide last year. And it caused a lot of consternation by a lot of people, but we've squeezed that back. And so the fact that retail prices stayed high last year has allowed the industry to rally the wholesale demand back without a lot of trouble here. And it certainly looks like it's going to be good now. Now, this is based on some forecasts that I make for the rest of this year, and those certainly could be wrong, but this demand thing looks very good at the present time, and it's one of the reasons that we've seen such strong cash hog prices as well as the cutout value. The other factor that's at play the last couple of years, and we'll go to the next slide, is cost of production. And of course, Gordon mentioned this a minute ago, and in fact, cost of production were record high last year, averaging on our model, which is based on the Iowa State University parameters, $97.31 per hundredweight carcass. Now, that model it best represents probably the low-cost 25% of producers out there, and we think the average producer is probably $6 higher than that. So average producers had break-evens of over $1 a pound last year. The good news is those are lower. The bad news is they're not nearly as low as they used to be. And so right now, corn and soybean meal futures would say we were going to be about $86 and change for break-evens for this year. Next year would be a little higher than that. Right now, you can see the green line going out through 2025, but still well above where we were in 2020. And one of the reasons for that is non-feed costs. And you can see where March 15th, this was actually March 22nd. I didn't change that on here. We had corn futures in for this year in the 459 range, soybean meal futures in the 358 range, and that's what resulted in this 86.53. Well, those are part of the increase from 2020 of 63.68, but not all of it. And part of it is increase in non-feed variable costs of about $10 per head. The increase in fixed costs of about $8 a head. These come from Dr. Lee Schultz at Iowa State. And that $18 a head is probably not going to go away. And so we think that I think the best we can hope for this year is something in the low 80s. I don't think we're going to get much lower than that. I would be very surprised if we saw any numbers that started with a 7 on these monthly cost of production estimates. And so I think I'm pretty comfortable with thinking we're going to be somewhere in the mid 86 range for this year. If we go to the next one, we'll lay hog prices on top of that same cost curve. And you can see right now, the 2024 estimate is for about $2 per head profit for those producers in that best 25% of the cost range. Okay, if you've got costs that are $6 or $7 higher than that, then you're still losing money here significantly on a per head basis. Now, that 196 was a minus 12 back in December when I started estimating 2024. So, and it's been as high as $5 here in the last month or so. So that's gotten decidedly better, but still 2023 right now ranks as the worst year ever, even worse than 1998 for U.S. pork producers. The one thing I would say on that, though, is that in 23, there was a whole lot more risk management practiced by producers than there was in 98. And we had the insurance products widely available, and they were widely used last year, as well as I think more hedging with futures and options. And so I don't think we actually realized that minus 27.71 on average around the country, because I think we made some money on our risk management. All right, that's the demand and cost thing. Let's go to the Hogs and Pigs report. The report came out today and showed that the total number of hogs in the United States was up 0.6%. That's a little more than what analysts thought it was going to be, but not a lot, less than 1% difference. The breeding herd was down 2.1%. Analysts thought it was going to be down 3%. The marketing herd Market herd up 0.8%. Analysts thought it was going to be slightly bigger. So if you notice over on the right, most of these differences are less than 1% from what was expected. And normally, if you have a report like that, it's not going to move the market a lot. The 190, 180 and over number agrees pretty closely with what slaughter has been since the 1st of March, especially if we adjust a bit for some missed hogs at Smithfield due to some wastewater issues. You can see farrowing intentions a little bit lower in the DSFEB farrowings were, but a little bit higher than what was expected in March, May. I don't think that's out of line with a 97.9 breeding herd, though. We'll see kind of how that works out. The number to look at is the one at the bottom. Pigs saved per litter, up 4.6%. That's significantly larger than what analysts estimated. I'm going to crow a little bit here. I had it up 4.5. So in that, Gordon, I finally got one of these numbers right. And so we have some growth there, and that's going to add to the pig crop, which up 2% is slightly larger than what analysts had thought. Now, you've got to project these out into the future. And one of the things we're watching for, if you look in the next one, is this dramatic rebound in pigs saved per litter. We went 3 years without growing this, and I think it was because we were dealing with heightened disease incidents, mainly of PRRS, and some labor problems in our farms. But boy, in the last year, we've really caught up. Now, as we go through the rest of this year, the year-over-year changes are not going to be nearly as dramatic. They're not going to be a +4 or something like that. It's going to be more like +1. But I think we're still going to grow this thing and push it up toward 12 here over the next couple of years. The next factor, next one is less disease. We've had a much lower incidence of PRRS as we've gone through this year. From July to late February, 10% of the animals, significantly lower than it was a year ago or any year for which the University of Minnesota has kept this data. I know this is just incidents, but most of what we hear around, we've had a little bit more PEDV, but we still think that herd health is the best it's been in some time. And that's one of the reasons we see that big pig saved per litter number. We're watching sow slaughter, the next one, pretty closely here to try to determine what's going on with the sow herd. Now, we ran sow slaughter up some in January. We think that was some depops, repops, and we had high levels of sow slaughter from May through September of last year when Smithfield was liquidating their Missouri operations. But we're kind of back into a more normal thing here. And so I believe we're going to see smaller year-over-year declines in the sow herd as we go through this year, and actually may move back into some growth when we get to 2025, given the improvement of profitability. It's not going to take much to change this. And so we think sow slaughter is going to be worth watching. The next one shows where we are with sow slaughter as a percentage of the breeding herd. You have to slaughter more than 1% of the sows that are out there on a quarterly basis each week in order to reduce this sow herd. We've not been doing that in some time. Now we're going to jump it back up around 1% here for the first quarter, but I don't think we're pulling the sow herd down very quickly at this point. And thus, you didn't get as big a sow herd reduction in the pig report as what analysts had thought. When I put these together in the next one, we have our quarterly supply estimates here. If you change the slide, please. Thank you. And you can see a couple of big numbers for the third and fourth quarter. And I don't want you to get too scared of those. One of the big reasons for those is that we have an extra slaughter day in those both quarters. Now, the good thing is we also have an extra consumption day both quarters. And so you have to be a little careful about this. But one day in a quarter is 1 out of about 62 or 3. So it's about 1.5%. So the fact that we have an extra day in the third quarter and fourth quarter adds 1.5% to that. And the big number for the fourth quarter also is related to December of 2023. And we had some difficulties with slaughter there. So still, those are pretty big numbers. This is a bigger number than what I had for annual slaughter. I had it plus 7% going into this. This is added to those numbers. And so I think we're going to have plenty of hogs in the fourth quarter. I'm very concerned with that number in the fourth quarter right now. I'm pretty concerned about slaughter capacity, especially with the loss of the Perry, Iowa plant going forward. I'm going to do some checking on numbers to try to verify those. But that's the numbers I've got right now. Now, the good thing is, if we go to the next one, is that demand says, never mind, we're going to be okay. And these prices look pretty good. I mean, it didn't change my price forecast hardly at all when we put these numbers together, given where demand has been so far this year. That's a big assumption that we continue with demand where it is, but still, the record so far this year would say that demand, both on the domestic side and on exports, is pretty good. And so we'd have prices up into the 90s this summer. Now, you know that the third quarter, you've got futures up around $100. And so I still think those are hedging opportunities. We think right now, or I think right now, that the first quarter of next year with February on the board at somewhere just over 80, I think that's decidedly probably too low at this point. Okay, conclusions. Costs are falling, but the amount will be limited. Mid 80s, maybe a little lower. Consumer level demand is going to remain below 21-22, but stay below those pre-21 near those pre-21 levels. Exports follow 23's plus 7.6 with plus 4.5, and I think Brett's probably going to tell you it's going to be a better number than that here in a minute. Wholesale prices are going to be above last year's. The breeding herd inventory is not going to shrink much more. I had -6 for December of this coming year. And at one time, I thought we might have to take it down 10. I'm going to be surprised if we're down much at all year over year when we come to December of 2024. Productivity gains are going to keep our numbers and pork supplies near or above the last year's. And I don't think we're going to see pork supplies decline much until 25. And given the profitability changes we've seen, maybe not then. So, Gordon, that's all I've got. We'll pitch it to Brett. I guess I'll just pitch it right directly to Brett, maybe, and have his comments on exports.
Great. Well, good to be with you all today. This is a high honor for me to be on with Dr. Meyer and talking about hogs and pigs. Now, my focus is in the global markets, and so I'm going to be spending my time talking here about how the U.S. pork market's going to be influenced, at least I think so, in the next year by these global markets. And if you flip through here, I think most of you are familiar with our company. We're an independent consulting firm. We provide market analysis, research, forecasting on the global protein space. So beef, pork, poultry, dairy, grains markets, etc. So just diving in here, the next slide, global hogs and pigs, and you can click to the chart. Here, I just wanted to show you what the global sow herd has done. Now, the top 6 production bases on Earth represent about 85-90% of the global sow herd. And these are the USDA numbers. And there you can see that global sow herd has been in decline now for about 10 years. And the big drop that you see in both of these charts would be African swine fever in China. That's when China, who had half of the swine on Earth, liquidated, in my opinion, 2/3 of their swine inventory in 2020. But outside of that, you can see the general trend has been smaller. And so we've moved into somewhat of a global herd liquidation, even beyond China. The challenge with that, as you can see in the chart on the right, is we know that we don't have to have more sows to make more pork. And really, we've seen increased productivity around the world, especially 2023 and 2024. So even though that sow herd is declining, and I think will decline in 2024, we're still going to keep about stable pork production. Now, on a per capita basis, we've taken pork supplies per capita down 5% globally in 10 years. So every man, woman, and child on Earth has 5% less pork than they did 10 years ago. Chicken is up 10, beef is down 10. And so that's kind of the layout of where we're headed globally. Now, I would say something we're seeing right now, which is really unique, and I say that in 20 years of doing what I'm doing, I haven't seen this scenario. We are seeing global liquidation across the global swine herd and the global beef herd all at the same time. And we just got some data out of India yesterday confirming that even the Indian buffalo herd is in decline. Brazil is in liquidation in their cattle herd. Europe's in liquidation of their swine herd. North America's in liquidation. China's now in liquidation. But we're in this unique spot where global meat and livestock is all falling into liquidation at the same time, which is interesting as you think about what's going to happen in 24, 25, and 26. What I'm telling you, we're going to have less meat and poultry the next 3 years globally. Over to the next slide. Here you can see the global hog prices. And I don't know if it's a curse or a blessing to be at the bottom of this chart, right? Because it's no fun working for free. It's no fun losing money. But the silver lining to where our markets are is we are incredibly competitive globally. And our biggest competitor on that chart is Europe, the orange line. And so if you look back over history and compare that blue line and orange line, about half of the time on that chart, the US was more expensive than Europe. And look where we are today. US hogs are about $23 a hundredweight below European hog prices. And not just Europe. You can see there Mexico, China, Brazil. US hogs are incredibly competitive. Now, we want that price to go up. And the deferred hog futures would tell you that's where we're headed. But we still maintain a very comfortable advantage globally in terms of pricing. Next slide, you can see here probably the biggest shift of the last 3 years was that pork exports out of Europe have dropped by nearly 2 million tons. Europe has been the biggest hog production base outside of China globally. And due to a whole raft of issues stemming from the Ukraine war, Russia's invasion of the Ukraine, the sanctions on Russia that limited energy supplies into Europe. I had hog farmers a year ago last summer telling me that they'd seen their electricity prices go up 500% from before the invasion. So energy prices, climate policies, animal welfare policies, there's a host of issues in Europe that have been very, very unfriendly to the swine production sector. And so we've seen those inventories now. The EU swine herd is down 9% in 2 years. And so European exports dropped 24% last year. 24% drop from our biggest competitor. Now, if you look closely at this chart, I'm going to make a bold bet here that the US actually surpasses Europe in 2024 to become the largest pork exporter globally. And I don't know how far you'd have to go back. In my 20-year database, Europe has always been bigger than us. We may change that this year. One, because of our competitive pricing, and two, because of that, what I think is going to be another year of decline in the EU swine sector. Brazil, you can see, is the only positive growth on the chart, right? Up about 85,000 tons. And Brazil is growing. Actually, when you look at Japan pork imports last year, the country that grew most in pork into Japan last year was Brazil. They only had 3% of the market in Japan, but they were the biggest year-over-year growth into Japan. And we're starting to see Brazil push into some of these other markets, including Mexico. All right, over to the next slide. Here's our pork exports. And you can see there by country, 2023, we had a 7% growth. 2024, my forecast last month, or earlier this month, was a 6% growth. I'm going to be revising that next week once we get the February numbers. And all odds are on a higher number than 6%. I've been looking through some of this weekly export sales data, which isn't a great database. But year to date, the shipment side of that weekly export sales data shows shipments to Korea up close to 80%, shipments to Japan up over 20%. Again, that's not the most reliable data set, but I think some of the prelim data shows we are really starting to boost exports. And I feel like I'm going to be chasing that 6% number higher as we go through the year. Mexico there, absolutely critical. I'm going to drill in just a minute here and talk about Mexico and China specifically. But before I do that, I want to show you some of the shifting market shares. This next chart, you can see the Korean pork imports. And this is what happens when Europe pulls back from that market. Can I get the next slide? This is Europe's exports down 24% last year. And you can see their market share dropped by about 10%. And that was made up by the US and Canada. We are shipping a lot more pork into Korea. The December, January numbers were huge. This is mainly butts. We ship a lot of shoulder butts into Korea. The Europeans were shipping bellies. And weirdly enough, this relationship we have with Europe, imagine a market where bellies are cheap and hams are expensive. And that's what Europe is. And so we kind of played okay together. But the big drop in that EU production means the Koreans aren't even getting their bellies. Now, they're not buying bellies from us. They're buying more and more butts and even some other cuts now starting to go in there. And so we're starting to see some real growth. And I think this is going to be sustained, the growth that we're making into Korea. Next chart, you can see Australia. And this is a lesser market, but it's a pretty decent little ham market for us. 2022 and 2021, we lost that market to Europe based on pricing, other issues. But you can see we're getting it back quickly. We've went back and taken a big chunk of that market share back. This year, we're going to continue to grow that Australian market share in 2024. The next slide you can see is Japan. And here you can see the EU declined into Japan, but the US did not gain last year. And Japan has felt a little disappointing up till now. The big reason is that Japanese yen has lost 30% of its value against the dollar in 3 years. And so even though the EU shipped a lot less pork to Japan last year, that big price spread was partially made up by the weak yen versus the dollar. Our strong dollar has made it difficult. Now, I would tell you in Japan, those big frozen inventories that peaked out 225,000 tons are now down around 180,000 tons. So they're reducing their frozen inventory. And based on our pricing, I think from here till mid-year, we're going to see a shift. And I'm projecting some pretty solid growth in pork, US pork into Japan, as well as Canada this year to backfill some of that lost EU supply. Over to China, you can see the drop in the EU. China's been in tough shape, and I'll talk a little more about that here in just a minute. But you can see that drop in EU shipments, and the big gain from where? Our friends in Brazil, right? And there's been no doubt about this increased relationship in agriculture between China and Brazil. And it is growing. It's not just corn, it's pork, it's beef, it's everything. China and Brazil have a very cozy relationship now with meat and poultry, and that's going to continue. Now, China's in a unique spot. Let me just shift over and let's kind of drill down on China a little bit. Next slide. We're going to talk about China. 57% of the world's swine herd, 18% of the world's population, yet only 10% of the world's arable land. And you can go to the next slide. We're seeing China lose self-sufficiency in every major agriculture product. They imported $234 billion in agriculture last year. They're buying more and more from Brazil and less as a percentage from the US. This chart shows that Chinese hog market. You can see the big roller coaster there of hog prices through African swine fever as they liquidated 2/3 of their swine herd in 2020. But you look there, the real challenge in China has been that for most, well, pretty much all of last year and really most of the last 30 months, they have been losing money. They've been operating below break even. And so our estimate is they lost somewhere around $13 billion last year farming hogs in China. And these are the big guys, the small guys, everybody. The piglet price on the right, that's kind of a leading indicator of where the market sentiment is. And you can see that little jump in piglet prices on the right. It was matched with the data just this week. We got a little bit of a rally. Chinese hogs are up to 15.2 RMB, but not great, right? And this is a market that feels very heavy. It feels very oversupplied. We just saw the February import data for China. Pork imports were the lowest in 8.5 years in February. February pork imports to China were down 40% from a year ago. And so it's supply and demand, in my opinion. If you go to the next slide, we've been hearing the bad news about a weakening economy. That economy remains weak. And so you have the combined factors of a weak economy and then overproduction. This extended loss cycle in China, this is one of the longest hog cycles of losses that I've seen in 20 years. And it's really based on government credit to the big hog farmers. They're trying to encourage production from the big mega farmers. But those financial losses hit everybody, and you have to ask yourself, how long can that easy credit last? Now, the government's put a heavy emphasis on those big farms, but if you look at the production numbers of those top 10, top 12 hog farmers in China, it's only about 30% of the annual slaughter. And that annual slaughter is still around 710, 720 million hogs. And so 70%-ish are mid to small size farmers. These guys don't have the government credit. And I think that's what's leading to this liquidation right now in China. The big guys don't want to liquidate. They want to build more plants, build more farms. They have big asset bases. They're waiting for this market to turn. And so what that tells me, we're going to have extended losses here into 2024. So what does all this mean for global meat and poultry? So China has weak demand. They have abundant supplies. Even their frozen beef inventories are huge right now in China. But Chinese demand for imported meat and poultry should remain relatively stable. And I guess 2023 was an example. They had a really tough economy, but beef, pork, and poultry imports still totaled almost 7 million tons, right where they had been the previous year. 2024 may be a tale of two halves. I think the first half is going to be really weak, and we're seeing that in the preliminary data. No big numbers for imports. The second half could see improved demand, and it depends on the economic news. It depends on how well they can clear those big frozen beef inventories and how deep they liquidate this swine herd. Now, for China, global economic growth, particularly in the US and Europe, is the best thing for their economy. Now, in Europe, we have a number of economies in recession right now. The US economy looks decent, but I think China's going to have another tough economic year. We'll see how low those hog prices or how low the liquidation goes. We could see some hog price improvement in the back half of this year, which could lead to some import demand maybe in Q4. Over to Mexico, 127 million people. They are now buying 10% of our entire pork production, the main cut being bone-in hams. So why does Mexico matter? You can click the next slide. Take a look at that chart on the left. That's our USDA weighted average hog price against the ham cutout. Pretty close correlation with hams and with the cutout. If you look at bellies, almost no correlation. But hams are a key driver. The price at which we can move hams is the price at which we set the cutout. And again, with Mexico buying 10% of our entire production, that number would be a much higher percentage of our hams. In pork exports, we're going to be about 26% of production this year. That's a good year. But Mexico is absolutely critical to us. And were we to have some kind of disruption there, that would have a major impact on our markets. Now, I don't think that's going to happen. The Mexican hog producers are still making money. The chart on the left raises some concern, right? Look at those hog prices way below a year ago and dropping seasonally. Now, is that a concern? Look at the chart on the right. That's hog prices, US dollars per hundredweight, that 82, 83 market we're in. And Mexico is now about a 115 market equivalent. And so, yes, those Mexican hog prices have declined. But what I'm telling you is they are still at a good profitable level. We still have a good competitive advantage. The thing to watch for, if we see those Mexican hog prices drop to unprofitable levels, then there's going to be more pressure against imports. Right now, we're price competitive. The Mexican peso is strong, and we're in a good spot. I think we're going to have another good year this year on pork shipments into Mexico. Next chart here, you can see just that hog price. US hams and Mexico hog price, and I converted this all into pesos per kilo. And there you can see the historical relationship. Hams are a little bit cheaper than the Mexican hog price, and that's generally the case. You can see sometimes hams are a little higher than the Mexican hog price. Right now, they're a little lower, and that tells me keep them coming, right? I think we still have good demand from Mexico to the south, and that's good news for us as we look into 2024. Just some final thoughts here to wrap it up. Global pork and protein supplies are tightening, not just pork. Beef supplies are shrinking. We're down 4% year to date on beef production just in the US, but we're also seeing herd liquidation in Brazil, in Australia. We're seeing the EU swine herd liquidation. That's significant. It's not a cyclical liquidation. I think it's structural. We've seen even in Germany, the swine herd's down 10% in 2 years. I saw a survey out of Germany recently that said 1/3 of German hog farmers said they will not be in business in the next 5 years. There's some real decline in that EU swine herd, and that opens up a lot of ground for us in this global market. US pork remains very competitive globally. China remains a wild card. We'll see where that goes. The only thing that could be interesting is if we see big liquidation, we see Chinese hog prices jump maybe in Q3. If they come to the global markets, that EU supply is not what it used to be. I still think China's working very hard to diversify away from the US as an agriculture supplier. We've seen it in the corn markets. I think they're gonna slow play any big purchases of US pork. The big shift this year will be that reduced European pork supplies. And I expect that liquidation to continue beyond 2024. The EU Commission, their forecast shows that EU swine herd declining every year over the next 10 years. They truly see a structural decline as well. So with that, I'll go ahead and wrap it up and we can open it up for any Q&A.
Thank you, Brett. Thank you, Steve. Why don't, Steve, you come back on camera? I think we'll have questions intermingled for both of you. And so start off with a thank you. Thank you for your expert review, both globally, in your case, Brett, and Steve, on both the current economic conditions, domestic conditions, and the just released Hog and Pigs report. So the first question, probably start with you, Brett, on this one. How do you see the U.S. economy playing into the comments you just made about the global demand? What economic impact will any U.S. economic either growth or recovery or post-COVID notes? And maybe Brett, you answer that first, and then Steve, you answer it. And we've got some questions in to follow up with you, Steve.
Sure. You know, the U.S. economy has outperformed expectations both last year and already this year. In November 2022, the Wall Street Journal put out a headline that said, I think it was like 80-90% of economists are expecting a recession within 12 months. And I think this last November, it would have been the same story. The U.S. economy is durable, and it's really showing some durability. And I think most people moved out of this recession camp into a soft landing. And yeah, I know we have some problems here and there, but it is impressive what consumers continue to spend even post-COVID in this market. We've got consumers spending into a high interest rate market, yet we're still moving homes. Home prices are actually still going up. It doesn't feel great, but on paper, the U.S. economy looks pretty good.
Thanks, Brett. Your comments, Steve? Your comments?
I would point out that Brett's introduction remarks there underscore the old saying that if you laid all the economists in the world end to end, you'd never reach a conclusion. I think that has absolutely been true. You know, the sentiment on this economy has been negative for 3 years, and I keep kind of raising my hand and saying, how do you have a recession with 3.5 or 3.8% unemployment? I don't know how that can happen, and it certainly seems to be very durable. You know, we're not going back to 2% interest rates or 1% interest rates, so all of you millennials that think that's where interest rates are supposed to be, you better adjust your expectations. I think we're back to the real world on interest rates. And I don't think that's a bad thing long term. It's a shock in the short term, but probably it was a little too stimulative. So, but I do think this thing's going to hang in. I don't see a lot of storm clouds here, in spite of what a lot of folks have been saying for a long time. And I guess if you say we're going to have a recession by the end of the year for enough years, you'll be right eventually.
Thanks, Steve. The next question from our audience, and this is probably primarily for Steve, but Brett, I'd also appreciate your comments on this. What's your biggest takeaway from the current report, Steve, that was just released this afternoon? What do you sort of summarize at a high level?
I think we're seeing, number one is it confirms our expectation that we'd see a smaller breeding herd, but productivity would swamp that and we'd end up with more pigs. My calculations for those last 2 quarters, I'm still a little suspect of them. I'll just tell you that. I'm looking at a spreadsheet here, and anytime you deal with spreadsheets, you can always have these little phantom things that go wrong with them. But I'm a little concerned about that. But if those numbers are right, then we're going to have some slaughter capacity issues in the 4th quarter. So that would be my takeaways.
Brett, your takeaway?
Yeah, I think that productivity number is the one that jumped out to me and continues. We just continue to get better and better at this, and that's going to put more hogs on the ground this year.
Yeah, thank you. Okay, another question, probably primarily Steve. What about slaughter weights, harvest weights? You see any changes? And are you concerned about the fourth quarter supply issue, and are then weights going to come up, or what's your comments on both weights and specifically in the fourth quarter?
Yeah, I would say both. Number one is over the next 3 months, we're going to see a pretty dramatic difference between slaughter weights this year and last, because last year we were dropping them like a rock because of the high feed costs, and so we were reducing weights rather dramatically a year ago, and that incentive is not going to be there this year. I mean, you're going to have probably positive margins for some folks here pretty quick, and that means that they're going to keep weights up this year, and we'll have a more normal kind of seasonal pattern. If we end up with those numbers in the fourth quarter, yes, we will see heavier weights because we probably won't be able to get hogs marketed on a timely basis. So I'm a little concerned about that.
All right, thank you. Here's one probably for both of you. Port of Baltimore is just in the last 48 hours, a kind of a classic black swan, right? That had just something out of nowhere. Any impact or on our industry? We know it's certainly shipping impact, especially East Coast. Any comments on our industry, Steve or Brett?
I saw a report earlier today that was done by the economist at the Farm Bureau, and he went through a number of agricultural goods, and it's a very small percentage of agricultural imports or exports go through Baltimore. It's just not very large for anything. It's way more important, as I understand, for automobiles and for car parts. Apparently, there was a pretty substantial proportion of those, but my conclusion from his numbers, I mean, less than 2% on these things on agricultural products. And so, Brett, I'll let you clarify or correct me if I need to be corrected, but I just saw that report came out early this morning.
Any comments on that, Brett?
I think I agree with Steve. I think it's pretty limited impact. I know there's some grinding beef. Sometimes we bring in some 90% lean through there. But you disrupt a port like that and you start pushing stuff into other ports, and we just get a little bit more precarious trying to rebalance and do things. And I think we've seen it, right? We've seen how fragile our infrastructure can be at times, and hopefully we can rebalance and make everything else flow and work and get through that. But I imagine it's going to be a while.
Thank you. This one, again, primarily for Steve, but Brett, I'd sure like your comments also, because I think you have awareness and some expertise. So the question is about the closing of the Tyson plant. It's a slaughter capacity issue. Steve, can you elaborate? You made comments earlier in your presentation. Can you just elaborate just a little bit in regards to, okay, how close are we on capacity and what's the impact of this plant closing?
Really close. I mean, especially if those numbers that I had in that chart in that table a while ago are absolutely correct. And again, I'm double checking those. I kind of ran out of time, but if those numbers come to fruition, then we're going to be pretty tight in the fourth quarter and tighter. And by the way, we would have been tight even with the Perry plant. So I'm concerned about the situation with packing capacity this fall. I don't think we're going to see any impact as we go through the summer, but it's going to be pretty snug.
Brett, you've got a comment here.
Yeah, well, not really. I agree there with Steve. I think that's a good explanation.
Okay, another question from our audience. Again, primarily Steve, but I think Brett, you're going to have some insight here. It's the 23 versus 24. The question says cash hog prices, why they're rallying in 24 after such a bad 23. But I think it pertains to just a bad 23 economically due to high cost of production and the economic impact certainly at the farm level, Steve. So can you give some further commentary and dive deeper into, okay, well, why is now, and you've cautioned me I should be careful about the word demand versus supply, and why is values, I'll say, so far good in 2024 and appears to be better, at least in the summer months.
Well, I'd separate the hog price and the cost issue. I mean, the cost issue is all a function of what's the cost, basically the price of corn and soybean meal. And of course, that's come down and that's helped us on the cost side. The question here is, what about prices? Why are prices so much better? And the answer is demand. I mean, we actually killed about 2% more pigs from December through last week than what the December Hogs and Pigs report would have said we should have. And so you would have expected the prices to be lower, and yet they weren't. And so the reason is that demand has gotten better. And consumer level demand was very poor in the first half, very soft in the first half of 2023, and it has improved pretty steadily through the second half of the year. And then, Brett and his cohorts over on the export side have done a great job, and that demand has increased. And Brett laid it out. I mean, supply issues in the European Union have opened opportunities for us. The Mexican peso has been stronger than it has been in years, in quite a while. I mean, it's strengthened dramatically. And Brett, I guess I can end my career this summer a happy man. I've actually used the word strong and peso in the same sentence. Which I didn't think I'd ever get to do that. And so it's demand, it's export demand, and some rebound in consumer level demand. And I think the prospects of that hanging on are pretty good, because income levels, they're not great. They're certainly not like they were when we were throwing stimulus money at consumers, which was the real driver of demand in 21 and 22. But still, income levels are going. We've got kind of moderating inflation. We've got beef prices that I think are high and going to get higher if we ever start keeping back some heifers. And so I think demand is the driver. And that's the reason I started with demand today, is while supplies are always an issue, demand and lower costs, which leave a lot more of that money in producers' pockets, are the things that have changed our outlook for profits for this year pretty dramatically. So,
comments, Brett?
I don't think I could say that better myself, Steve. That is, I agree. It is demand. And yeah, the cost function is completely shifted. It looks like we've got some real relief coming here in corn prices, feed prices, but the demand has definitely improved. And like I say, on the global front, the tailwinds are blowing, right? We have some solid reasons for optimism on the export front. You mentioned beef prices, Steve. 90% lean beef just hit $3.39 a pound, all-time record high. And this is before we even begin restocking. We are going to see fireworks in the beef markets. And I know that's not a one-for-one trade, beef to pork, but we're going to be putting record highs in across the beef complex this year and next year, which is not bad news for pork either.
So,
okay. Maybe 30 seconds for closing comments, Brett or Steve, if you have them. Otherwise, we're going to bring the session to a close.
I'll just say, I think, I guess I kind of wrapped it up there, that from the global standpoint, things are good. There have been some years we'd be looking at this going, this is not going to be a great year from the export side, but things look really good on the export front. We're incredibly competitive. Our biggest competitor is now in structural decline. And we have great access into these key markets now. And as long as that continues, I think we've got a good road for export demand this year.
Thank you, Brett. Steve, closing comments?
I think it looks to be a good year. I'm a little concerned about what we're going to have in the fourth quarter because of the numbers in this report.
I think that's fair, Steve. So thank you for that. So as we wrap up, Brett, thank you for your contribution and your tireless advocacy for our U.S. industry around the globe. Thank you.
You bet.
And Steve, thank you not only for your comments today, but you sort of gave a hint out there that you'll close out your career this summer.
I got one more.
Okay. One more report. Is that is that a warning, or is that one last shot, Steve? Yeah,
it's a warning and a promise. So,
but we do want to take this opportunity, Steve, to thank you for your tireless effort as an advocate of the industry. You and I have known, and many producers have appreciated, known each other for a long time, and appreciate your tireless effort to educate producers and the entire chain on the economic impact of public data like this, right? So we thank you for that long, illustrious career. So thank you. That's maybe a little premature, but it reminds everyone that, hey, pay attention to Steve. He's on the clock. How's that, Steve?
There we go. It's
Yeah,
my honor and pleasure.
Yeah, well, thank you for your advocacy. And so we're going to bring this to a close. We, as a producer, right, and there's many producers on this call, we know we faced economic headwinds, as the entire industry has. And so we thank Steve and experts like Brett that allow us to be educated on not only our domestic industry, but also the global industry of which we're a part of. And also, as a pork board member, personally now, my personal comments, just like we both had disclaimers, or Brett and Steve had disclaimers about, these are my opinions. I see up close and personal the tireless work by not only the pork board itself, but the entire staff, and Bill and his team, what we're trying to do, and pork board as an organization, to make our industry the best in the world, which I fully and personally believe that we have. As Brett has said, we're the most competitive in the world. I believe we can be the best in the world by many other measures. So with that, I'm going to thank our guests one last time, and thank all our listeners for joining us on this session of the current U.S. Hog and Pig Report just released today. Thank you.
Thank you.